How is everybody doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, I have a special guest coming on. Paul Davis from the Bank Slate is going to be joining us. We're going to be doing an interview here to basically talk about what's going on in crypto right now. There's a lot of proposed regulation. The new administration's kind of taking a different stance, a different shift toward crypto in general. So we're going to get into that conversation with Paul and maybe try to find out a little bit more about maybe how banks should approach this in the, throughout the rest of the year and maybe into the future. And with that, I'm going to bring Paul in. Paul, how are you doing today?
I am doing great. How about you? Thanks for having me.
I'm doing fantastic. Thank you so much for being with us. I really appreciate you taking the time.
Yeah, no, it should be a good time. I mean, it's an interesting topic, so I'm looking forward to getting into it, man.
Fantastic. So, okay, so if I could set the stage here for a second. So I have been doing an ongoing crypto series on my channel. I've done about 17 parts so far. I've covered a lot of different aspects in the crypto space, but I saw an article that you did in on a website called FinXTech, and I can actually bring that up for a second, just so everybody could kind of see this for a minute. So the article was called Navigating Crypto in the Second Trump Era. And I thought it was a great article because it was very balanced. Paul took a very balanced approach to this, basically saying, okay, what is the, what's the argument for crypto? But if banks want to get into crypto, basically, what are the concerns or things that you should be thinking about? And this is really what we're probably going to spend the bulk of our time talking about today. So, and just for everybody to know, I will put a link to this article in the description down below. But if you want to go check it out, it is on finxtech.com. So you can go check out the website there. But Paul, if I could kick off here for a second, so could you talk just a little bit about what is your case maybe for or against crypto? And then what do you think, if banks want to get into this space, how do you think they should approach that?
Yeah, I appreciate the first question. It's a really good one. And I'm hearing a lot of questions from folks about this, especially in light of the messaging from Washington the last couple of months. My take on it is it depends. I mean, it really does depend on the risk appetite of the bank. It depends on what they're seeing in terms of outflows of deposits to crypto exchanges or to other folks that might offer the service, right? So I think really each bank has to have their own moment of soul searching to decide, is this something we want to get into? And do we have the wherewithal to stick with it for the long run, through the highs and the lows? I mean, this has proven to be a very up and down business over the years. And so you really just have to, first of all, figure out, is this something that we want to get into? Secondly, if you decide that this is something that you're interested in pursuing, you need to go ahead and start getting the educational elements done now. It takes a long time, as you may have seen in the article, for you to start a business like this. You have to find the personnel. You have to make sure you have the compliance in check. You have to find the right outside tech providers. All of that is a time-consuming process as well. So I think if you're looking to start this thing up, it's not like flipping a light switch and suddenly you're allowing customers to buy, sell, hold crypto. It's going to take months, perhaps a year, to really get something like this up and running. So if it's something that you're inclined to pursue, now's the time to go ahead and start talking to folks and getting your educational process going.
No, it's some excellent points that you make, and I've got very mixed feelings on the whole crypto issue, Paul. I think on the one hand, like I've had some listeners have basically said, "Oh, hey, why are you kind of so negative on crypto?" And I think that what I keep coming back to is that it's not that I'm negative on crypto. I like the technology. But I don't like some of the actors in the space. I'll put it that way. We've had some bad actors in the space that have caused a lot of the issues, and I think that's the overlying. And I find the regulation sounds good in theory, but I wonder. I don't think it's going to be that easy to maybe necessarily put the right type of regulation around it, like the guardrails, if you will, to kind of secure it in a place where everybody is going to feel comfortable with it. So I guess that's where I kind of go back and forth on this. And I think you make some great points, because I'll point out a bank. Case in point, there's a bank right near me, not far from me, called Customers Bank in Reading, Pennsylvania here. And customers decided to kind of pick up the ball on crypto, if you will, after, Silicon Valley Bank and Signature Bank went out. They basically picked up the ball and said, hey, we want to kind of be the crypto bank. And then the Federal Reserve Bank of Philadelphia basically wrote them up, put them under a consent order, basically said, hey, you guys, you weren't basically doing what you should have been doing from an AML and a BSA standpoint with the crypto programs that you were running. And so they kind of got in some hot water there that they're trying to, work their way out of now. So I think, again, your points are so valid. You got to be very careful about how if you want to get in this, you have to be very careful about how you're going to do it. And I think you're spot on with, you need the right personnel, and you need to educate people, and you need to bring, people along. Do you think there is any bank out there right now that you maybe see approaching this from the right perspective in any way, shape, or form?
It's hard to say right now, honestly, because I feel like most of the banks that kind of dipped their toes in the water a few years ago and really were leaders in the space kind of pulled back, 2 years ago. I mean, we saw the issues that, Silvergate had, that Signature had. Not that crypto was the end all be all reason for all the turmoil that happened, in March of 2023, but it certainly got a lot of publicity for being a contributing factor for some of those guys. So you saw a lot of pullback in the industry. So right now, I think that by and large, banks are still in that wait and see mode. They either backed off or they're just kind of being very cautious. And I agree with you. I am not a cheerleader at all for wholesale adoption of crypto services personally. I think there's instances where it might make sense for a select number of banks, but I don't think this is something that the banking industry should just dive into the deep end of the pool. Certainly not now. Certainly, not even 6 months from now, but like you said, with these consent orders and a lot of the kind of the restrictions that kind of came out the last 2 years from Washington, even with the messaging now, the compliance is still important.
Yeah. Oh, absolutely. And I would like to point out, so in the article, Paul, you do a great job. But Paul points out how Metropolitan Bank Holding Company in New York, they basically exited the crypto business in 2023. There's a bank called Vast Bank in Oklahoma. They kind of pulled back on it. And then he also cites a survey from the Conference of State Bank Supervisors that basically said that 93% of banks really don't have a whole lot of interest in crypto right now. So again, you make some excellent points in the article about kind of what's going on there right now. And and Jeremy Powell basically did step up probably about a month or so ago and said, if banks want to get into crypto, they can, but they should be aware of the risks and they should be very cautious. And I think that was kind of good wording on his part, if you will, when we look at this.
Well, not only Chairman Powell, but also the acting comptroller of the currency has messaged that there's nothing wrong with exploring crypto. And while he was at the NCUA had also very accommodating stance towards credit unions that wanted to evaluate crypto strategies as well. So we are seeing, the heads of multiple federal agencies say, we don't see anything wrong with it, but just make sure you do it in a responsible manner.
Yeah, and I think it's a very interesting situation, because I don't think you can afford to ignore it. Like, I don't think you can afford to just, be blasé and say, oh, no, you know what? That's not our cup of tea. We don't need to be interested in that. So I don't think you can ignore it. But it gets back to that question, like, there's that whole concept of first mover advantage. You try to
Right.
be the first mover in the space, whatever. And I think this is one of those product lines, if you will, or potential product lines where I don't know that you want to necessarily be the first mover. Maybe being a fast follower would be better in this situation, and kind of let a couple other banks kind of, do the testing, if you will, and kind of, figure it out first. And then you can kind of jump in after things kind of solidify themselves a little bit more. I don't know, maybe.
Well, and if you look at it, I mean, how many banks do we know between the two of us that already have somebody in-house that can be the preeminent expert in blockchain, cryptocurrency, et cetera, right?
Yeah,
Very
that's
few,
fantastic.
if
Very
any.
few, very
Yeah.
few. Yes.
And so, I mean, that's the first thing I look at is, do you even have the talent to effectively manage a program? If the answer is no, then you certainly have no business trying to dive into it ASAP. I mean, it's a methodical process then to find the right partners, both internally in terms of hiring, but also externally in terms of third parties. I mean, and third party risk is still a real thing.
Mhm.
Washington might ease up a little bit on that, but honestly, it's still a reputational situation. If your third party makes a mistake, the stink is going to come back on you. So again, whether that's crypto or anything else, I mean, these are real considerations that can affect a bank's financial health, its regulatory condition, as well as reputation in the community. So, these are not light decisions for any financial institution.
Yeah, no, absolutely. And so now let me ask you this, Paul. Toward the end of the article, you basically talk about some of the opportunities, and you think that the best thing that maybe banks could do with this is to just be kind of a facilitator of the buying and selling of crypto, as opposed to holding the assets. And then you talked about potentially working with third-party fintech vendors, and that got me thinking. When I think of one of the preeminent exchanges, Coinbase, do you think there's a chance that banks could maybe partner with a company like Coinbase to do that, kind of facilitate the buying and selling of crypto, or something in that fashion?
Yeah, I mean, I think that there are certainly outside providers that could provide safe, secure partnerships for banks that want to get into that. At the same time, again, I come back to it. It's a methodical process of evaluating those providers, talking to other people who have partnered with those providers, consulting with your regulators, obviously, about this before you get too far down the yellow brick road. You know, that's the key. Sure, and I will tell you. I mean, the main thing I would advise a bank to do before they even decide whether they want to look into it is go back to it. Look at your deposit outflows. You have all that data handy. See how much of your deposits are actually going out to outside providers, and make a decision. Is that number one? Are those deposit outflows substantial enough that we need to consider a defensive stance to try to offer services to keep those deposits at the bank? But number two, are those the deposit relationships that the bank wants to have long term anyway? Will those deposits create other revenue opportunities over time? Or is it best to just let those deposits ebb and flow through an exchange or through an outside company, because you want to focus on the deposits that can be turned into lending relationships, into fee opportunities, that kind of thing. So I mean, I think those are all considerations before you even get to the stage of trying to partner with somebody like a Coinbase.
Got it. I think that's excellent advice, Paul. Fantastic. And then let me just ask you this: as far as stable coins versus your cryptocurrencies, your Bitcoin, your Ethereum, that kind of stuff,
Yeah.
do you think that it would be, I guess, easier in a way for a bank to start with something like stablecoin as opposed to just cryptocurrencies, or does it not really matter?
I mean, that's a good distinction to make. I think, from my opinion, stablecoin, especially if the stablecoin legislation goes through in Washington. I mean, of course, you never know until you actually see what the final legislation looks like. But a stablecoin with the support of the U.S. government probably has a lot more consistency to it.
Mhm.
You can probably put a better valuation to it. It probably has a little more certainty. We could talk about the pros and cons of stablecoin legislation in the U.S. potentially getting into a stablecoin reserve, But from the banking perspective, that's probably a little bit, there's probably offers more consistency there than trying to go into more of the, cryptocurrency that, obviously has its own ups and downs and sometimes acts rationally and oftentimes acts irrationally.
Oh no, yeah, I totally agree with you there on those points. And so okay, let me switch gears for just a second here. So we just saw this first ever like White House crypto summit. You had just mentioned they talked about creating the potentially the strategic Bitcoin reserve. Um, how do you think that plays out? Because it almost felt like it almost felt like in a weird way like it was a step in the right direction, but then it almost felt like there was kind of like some cold water thrown on it at the end, because it was basically like, well, we're going to set up this strategic reserve just with what we have. We don't
Yeah.
really have plans to put more money into this. And I think that was what the crypto world was really hoping for, was that, oh yeah, the government's going to start buying more crypto, thus, kind of forcing the price of crypto up in
Yeah.
certain respects. But I don't know. Did you have any thoughts on that, or after all that kind of took place?
Yeah, I mean, and that goes back to the whole idea about, crypto having those ups and downs, right? A lot of times it shoots up when there's a lot of perceived optimism, but then when that optimism dissipates, the waters recede and people get burned on it, right?
Mm-hmm.
When you talk about the whole idea of the U.S. position with a stablecoin reserve of crypto, I think a lot of it is just putting out test balloons right now. Just let's put a flyer out. Let's see what the response is and go from there. It's almost like conducting a poll, but doing it almost in real time with a discussion, open discussion on the topic. So I feel like there's a mixed bag on this whole discussion about a stablecoin reserve. On one hand, it could add some predictability, some consistency, to the market. But also, if the government is dealing extensively and builds a reserve, doesn't there seem to be a perceived conflict also regulating the
Yeah.
dealings in that space? So, there's some intricacies there. Okay, let's say we start building up a reserve. Well, how do you regulate it in a way that, you can't say that it's being done in a way that benefits a big holder of those stable coins?
Yeah, no, exactly. And that kind of gets back to the concerns I had mentioned at the beginning about, I think the regulation is very tricky here for like, are you going to be able to set it up and do it in a way that it's going to answer all these concerns, and it's going to, address all the different parties involved. So again, I totally agree with you there. I think the regulation to me is a very tricky thing. And I think that's also why they've been talking about it for a number of years now, but nothing concrete has really happened yet, because it's very tricky regulation. Let me ask you this. Do you think there's a chance that I know we just got, like President Trump put out an executive order basically saying like, no, we're not going to have a central bank digital currency, anything like that. But do you think there's a chance that the Treasury creates a stable coin, like a U.S. stable coin backed by the U.S. dollar, fully to try to help, I don't know, build out the crypto reserve, or maybe try to give people more faith in the stablecoin market? You think there's any chance something like that could happen down the road?
I never rule anything out based on this administration and how decisions are made in Washington these days. I mean, I think, it would take some exploration and more research. I still think that even with this administration, there still is this mindset. You still have to do the upfront work before you pull the trigger on something as substantial as that. Is it worth exploring? I think so. I mean, if you think about it, other countries are exploring this type of move into digital currencies. Certainly, the United States should be, moving towards that path, at least from a due diligence perspective. But, do I think Treasury is going to, in the near term, just suddenly make something happen? I doubt it. But, I come back with, with what's going on in Washington these days, you just never know.
Absolutely. And all right, so if I could switch gears for just a minute here, Paul, could you
Yeah.
basically tell us maybe a little bit about your background and the Bank Slate and what that is and kind of how you got into all that?
Yeah, absolutely. So, I've been involved with the financial services industry my entire professional career. My first real big job out of college was with S&L Financial, which is now part of S&P Global. So I was overseeing basically their coverage of all financial services companies, including broker dealers, REITs, but primarily banks. That's how I really got into it. I spent 16 years at American Banker, most of that following over, as the editor of the Community Banking Bureau. Our team covered topics of interest involving pretty much most banks up to 20 billion of assets. So after doing that for a while, I decided to try something new. So I went into the consulting side of things, worked for a consulting practice for 3 years. And then about a year ago, decided that I liked the idea of working directly with banks, credit unions, and fintechs. It's a really energizing thing. And so, Bank Slate really kind of took on its own kind of form as a research and consulting practice.
That is absolutely fantastic, and that's a great resume you have there, without a doubt. So let me ask you this: if people want to find the Bank Slate, how do they find it?
Yeah, so I will tell you too that our focus has been on strategic planning, things like 5-year plans, balance sheet growth strategies, things like that. We also do board assessments, board governance. We can build an onboarding platform for new directors. We can create an educational curriculum for existing boards. And so that's something that we've been doing more work with as well. And then the third leg of the stool is we're doing work with fintechs. So we're helping early stage fintechs and their founders create readiness plans so that they can be prepared for the compliance questions. They can be prepared for the customer service questions. And even just being fully aware, eyes wide open. So when they go into a bank trying to promote their product or service, they're not hitting a brick wall once they get to the compliance and legal departments. So those are the big focuses for us right now. Folks can find us by going to our website, thebankslate.com, thebankslate.com. Or just reaching out to me directly. My contact information, Paul Davis. It's Paul at thebankslate.com. I just tell people, shoot me an email. I'm happy to send more information about who we are and what we do.
Fantastic. Yeah, and I will absolutely have to have you on for another episode just to talk a little bit more about the Bank Slate, because you guys do a lot of really cool, good stuff, and we'd definitely love to have you back to talk on more of those topics.
Yeah, that would be great.
But all right, so let me ask you this. So this is just kind of a trademark. It's what I do with anybody I interview. Do you have a favorite either business book or business-related movie that you like?
Yeah, let me give you a couple of things. For the book, when I was in the MBA program, I read Good to Great by Jim Collins.
Yes,
and his other books as well. Those I found have been very useful in just kind of taking the complexities of business growth and just kind of making them understandable and digestible. So I love Good to Great. Saw him speak a couple of times. Just great, just easy book, easy read. I call it an airplane read for people who want to better understand just business concepts. And then, you can't go wrong with Michael Lewis, both the books and the movies, The Big Short, Moneyball. Personally, I love The Blind Side. I feel like, people think of it as a football book, but it's really the business of college sports in a lot of ways too. And so anything by Michael Lewis, again, I like good airplane reads because I'm on the road a lot. So, those are some easy ones I would recommend.
Yeah, no, I think they're actually great. Jim Collins, I absolutely love. I mean, when you talk about the whole concept of turning the flywheel,
Hedgehog concept.
Yep. Why, one of his good, why good companies fail.
Mm-hmm. I've got that on the bookshelf too. Yeah.
Yeah, he has written some absolute classics, and while I've never seen him in person, I have watched a number of his presentations over the years, whether it be at TEDx or whether he was just talking at like a college university. And he's a phenomenal speaker. So if anybody has never had a chance to just maybe go see one of his speeches or a lecture when he's talking about the books and his different concepts, check it out. I'm sure you could find probably dozens of videos on YouTube if you go look them out. I'm sure they're out there. But yeah, I love Jim Collins. Great books there. And I'll tell you what, Michael Lewis, he seems to be a channel favorite. Like many of the people I've interviewed, they all love, whether it's The Big Short or Moneyball. He seems to be one of the big ones that we get all the time. Everybody kind of loves a lot of the Michael Lewis stuff, so which is great. And it's it's kind of funny, because Michael Lewis, his newest book was called Going Infinite, which was all about FTX and what I was surprised to learn. So he was actually with Sam Bankman-Fried. He was working on the book when basically the whole company imploded. So he literally had a ringside seat, if you will, to the whole thing. And he was with Sam Bankman-Fried through the whole thing. And that's what the book is about. And I'm sure knowing him, I'm sure he's probably trying to make a movie I'm sure he's going to try to make a movie about it at some point. But it's a fascinating read if you ever, and again, I've kind of covered it in the crypto series that I did and all that. But if you get a chance to go read that book, another Michael Lewis gem, definitely go check it out. But yes.
But then the question is, who's going to play Sam Bankman-Fried in the movie?
That's a great question. I think you'd have to find a very unique actor to play him in the movie, to kind of nail that. Because he is a very interesting character without a doubt. So
I mean, if only John Belushi were around today.
Yes, yeah. If he was around, he could probably nail that part with the yes. I don't disagree with that. But yeah, try to think of actors today. I almost think that you'd probably have to find an unknown actor. You'd probably have to find somebody who's young out there who maybe can really hit the mark on that. But it's an interesting. Yeah, it's interesting. I'll have to think about that a little bit. Who could play him in the movie? That would be that would be very interesting. But that great. But great suggestions. But any final thoughts or anything, Paul? Anything that you think we didn't cover today, or any final thoughts before we wrap up here?
I mean, I just keep coming back. Just be very mindful about any kind of novel banking strategy, anything from the innovation side. Yes, the messaging in Washington is that they're open for business. They're more open-minded than they have been in a long time. But talking again about FTX, all it takes is an FTX or a Synapse to convince the regulators to whipsaw back into a not on my watch stance. And, as Mike Butler from Grasshopper Bank told me a few weeks ago, what the government giveth, the government can take away. So never just take positive messaging to mean that that's positive messaging for the foreseeable future. Any hiccup in the market can certainly lead to a switch in the regulatory stance.
Absolutely. I agree with that 100%. So, and very wise words. So, with that, again, hey, thank you so much, Paul. I really appreciate you taking the time, and I absolutely cannot wait to have you back again in the future. We're going to have to talk more about the Bank Slate. And again, I just really appreciate you taking the time to be with us today.
No, I had a great time. Thanks for having me.
You got it. All right, everybody. Well, that was Paul Davis with the Bank Slate. I will put a link to the Bank Slate website down in the description below, along with the article from FinXTech that we talked about today. So with that, I will basically wrap up by saying if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember to leave your comments down below, as I always love getting back to everybody. We are on YouTube, Rumble, and all major podcast platforms. And as always, please make sure to check out some of the other content on the channel. I hope everyone has a great day out there, and I will see everyone again real soon. Thanks a lot.